Good morning and happy Friday, traders. It is 8:02 a.m. Friday, the 27th of February, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Not too much on the news feed from last night. Japan's jobless rate is higher to a 4-month high, while both industrial production and retail sales exceed expectations. Russia is said to seek permission to use 3.2 trillion rubles from its sovereign wealth fund. It's a reserve fund. Now, yesterday there was an indication by a Russian spokesman that the Russian economy really isn't as affected as the West thinks. Yet here they are today, pulling money out of their reserve fund, out of their savings plan, so to speak. The German lower house approves a 4-month Greek extension of its bailout program as expected, so we're moving forward with this Greek bailout. So that drama is a little bit out of the way. Let's revisit in 4 months. German February preliminary CPI comes in at 0.9% versus 0.6%, so slightly higher, which is what the ECB wants. Year on year, 0.1 positive versus negative 0.3 expected. Q4 U.S. Q4 preliminary GDP analyzed Q on Q comes in at 2.2 versus 2.0, slightly better. Personal consumption comes in at 4.2 versus 4.303, also slightly better. Price index, GDP price index comes in at 0.1 versus 0.0%. Core PCE Q on Q 1.1 in line. And then finally, the S&P fair value is at negative 1.9 today, negative 1.9. Cash is trading 1.9 points below the futures, or the futures are trading 1.9 below the cash. Sorry. Looking ahead, 8:45, we have February Chicago PMI expecting 58.0. This is a high tier number. This could be a mover. I want to remind you again that this number actually is a private number, and it has subscribers, and those subscribers can get this number earlier. The subscribers can get it as early as 8:42, 9:42 Eastern. So be careful if you have a position on and you don't have scale. You might consider closing and waiting for this number to pass. You might see a move or a flutter between 8:42 and 8:45 this morning. At 9 o'clock at the top of the hour, a half hour after the open, January pending home sales, excuse me, January pending home sales, month on month at 2%. And then also at 9 o'clock, we have the final University of Michigan confidence, 94.0. And then at 9:15 Central, we have Fed's Fisher speaking. At 1 o'clock, we have the Baker Hughes rig count. Not 1 o'clock, at noon, we have the Baker Hughes rig count. This is a weekly number, tells us how many rigs are in operation, crude oil rigs. And then at 12:30, we have ECB's Constancio in New York. And then this evening at 7, we have China's February manufacturing PMI, as well as non-manufacturing PMI coming out. That completes the week in numbers. Let's look at the overall picture here and see what the story is. Let's start with where we left off yesterday with our trader bite. The trader bite yesterday indicated that we're opening in the inside of the prior day's range. It also indicated that there's not a clear hypothesis to go on for the day. I don't have the big trade of the day from yesterday because of where we are. Now recall on Wednesday, I expected responsive buying up and then a selling to kick in. I was expecting the market to start rotating down, and then it ultimately sold down into the value low of Tuesday, and then it found buyers for a push to new all-time highs. And so with the condition that we had, I'd also indicated yesterday that with the market's imbalance, we have a lower point of control inside of the prior day's value. The market does not, as I'd said, the market traditionally does not rally one time frame up and then suddenly one time frame down. It generally goes, it transitions into balance for a period, and then it reverses, or it transitions into balance and then it continues higher. However, I did indicate yesterday that I expected responsive buying to at least 1150, which was the point of control. We got to 1175 early on. I did say that I would not overstay the longs, and that I do anticipate a push lower with a target at 99.75 and then 91 below that, as what's likely to happen over the next couple of days. So I suggested that at least in my own trading, I would not press my targets yesterday. And so what we got was a perfect rotation here, responsive rotation. Took out the point of control by one tick, 1175, just to make sure everybody got filled. And then we had a nice rotation down, 8-point rotation down into 2103.75, with the prior day's low at 2102.75. So the 2103.75 was too high to catch a scale ahead of the 2102.75. Those of you who have been following for whatever 5 years now know that I always front run my exits by 2 ticks in general, unless the volatility is very high, at which point it's discretionary. But this did not push down. This stopped 4 ticks ahead of the level, 2 ticks ahead of the scale, and then the market ended up pulling back, sat through this pullback to mid, looked really good. The pullback to the mid looked like actually a chance to add. Chopped around. We got a nice little layup here to break lower. Little head fake, and then it broke through back into the opening swing, and that ended this trade with 2 scales and a loss overall net gain, but not as much as the plan had devised. The market then pushes through the IB high to 12.25 just by 2 ticks. Pulls back to the open, attempts it again, misses by a tick, and then rotates all the way back out of the opening swing. So now we see that sellers may be dominating, or the market's going into balance. Attempts the IB high again at 1175 on the dot, higher low, back to the open, and then ultimately loses its footing. Buyers step aside, sellers dominate, and we have a neutral day. And we ultimately got that 2102.75 low, so the one-time framing up again has been challenged and has ended, and then immediately afterwards it walks right back up to put in a close right at the point of control against the open. So what we have is basically a doji here with a pretty poor high. Not a huge fan of how this high was left behind. So if we look at this on the bigger picture, so my point is we did get the selling that I anticipated. I did not have a plan, so I can't take credit for anything that has worked out or whatever on the sell side. I did not. Yesterday was one of those days where it's just play it by ear, but let's thicken these up. You can see here we have a market that opened exactly where it closed, or closed exactly where it opened. But overall, we have a topping pattern with a balanced profile. 2111 being the MC point of control here, value high at 2114, value low at 2108 half, which ties in with this 2108.75 high that we used to have. So with that being said, overall, when we look at the 15-minute, just to get to get a look at what the pattern is here, the 15-minute shows there's your point of control, then there's your point of control in balance but lower, and there's your point of control on the edge of value. but lower. So to me, this is a topping pattern here. I still hold to the consensus or to the thesis or hypothesis that I'm speaking Greek. Um, uh, that this is likely to rotate down to 2099.75 from here and then push through to 2091 as the key target below. That's what I'm still looking for. It is Friday though, and there's nothing on deck that would make me believe that there's huge movement. The Greek thing is pretty much over. Um, there's a mini crisis here in the U.S. with funding of Homeland Security and so forth, but I don't think that's going to affect the markets. And then, of course, we have University of Michigan and Chicago PMI that might give us a flutter here and there. And then looking at clues on the overnight session, there are none. We have a balance profile with some really, really heavy kurtosis. Look at how sharp this value area is. Very, very heavy balancing here. So we might get a nice push on the open to dissipate some of this. The overnight inventory is pretty much balanced to the balanced to slightly on the sell side. So we might get a little bit of a push higher on the open to balance that out. But the overnight volume is about half of what the norm is. And so there's not too much to glean from there. So looking at this for today, I would say more of the same as yesterday. I would not be surprised if the high gets challenged and tested up to 2012.50, 2012.50 and up to 21.14 for the value area high of the micro composite. Given that it's just a poor high left behind from yesterday, we came back to it and we couldn't break. There's quite a bit of volume that stopped at the top there on yesterday's profile. Look at that. It goes from 27,000 contracts at 21.1150 to 7,500 and then 7,000. Huge step here, a big ledge that makes for a weak high as opposed to a taper. This is beautiful excess low here. See how it tapers out? The volume just tapers down very, very methodically here. So you can see it go 23, 23, 28, and then it goes to 18, 17, 14, 10, 9, 8, 5, 7, like that. That's a market that is shutting off in a methodical way, and this is what a weak high basically looks like. Remember, the 2088.75 high that we've had was a weak high, and we did ultimately take it out just as I had been talking about. I'm not pulling this stuff out of thin air. It's based on studies and statistics, and that's really the name of the game, is looking for an edge statistically. So overall today, my plan, what am I going to do on the open? Right now it's trading at 2108. It's 8:16. We have 14 minutes left. 2108. It's opening in value, in range, with the point of control higher. I anticipate that we would have, like I said, a fair amount of energy. The overnight point of control is below us at 2106.75. So I'm looking for 2109.50 to be challenged to fulfill the overnight stat. Might push up to 2111. It'd be nice to see this overnight high get taken out so we can close that. And then I would look for a rotation back down to 2107, and then for it to challenge potentially the overnight low and start moving into this excess and filling it back in. That would be the ideal situation, because that opens the floodgates to 99.75 and then 2091 for some movement. But again, I'm realistic. I know it's Friday, and the market doesn't trade what I want. It trades what the larger participants, whatever business the larger participants have to do. So I cannot leave you with a, a clear clue as to which side this is likely to go. But that's what I'm anticipating. I'm anticipating responsive buying back up, overnight high to be taken, a challenge at 2111, again a challenge at 2112.50 or so, and then for it to be rotational in the afternoon and possibly sag and continue this movement in the point of control down. We are one-time framing. We may be starting to one-time frame down. As I'd said 2 days ago, I anticipate that the top is likely to have been achieved or is close. And here we are, lower lows, lower highs yesterday with lower value, lower point of control. So I was a day early on that. That's really it. Not much more to cover. I'm over my time anyway. Euro stocks continue to bounce as expected. They've moved away from that 35.54 area back here and continue to explore higher. The next area up, we have a composite LVN at 3,600. I did anticipate that it would spend more time doing more of what it did on Wednesday, but yesterday it did start to move higher. It did start to move higher with the Greek deal being done. I do anticipate that it's likely to rotate back down and come back to the 35.54 area again, but it just seems to be floating along on lower volume. Stage 5 traders, those who are with Stage 5, I want to remind you we have our webinar at 12 o'clock. We'll go over the pop quiz and we'll take questions today. You'll see the invitation for that in your mailboxes here in about an hour and a half or so. Thanks for listening in this week. Good luck. Have a great weekend and keep it tight. It is Friday. Don't go into the weekend with a burning pocket because of a bad loss. Good luck. Talk to you soon.